Hello, everyone. This is Sanat Karkar, Managing Director of Moonrock Consultancy, and today we are discussing the currency shift, a regulatory perspective on digital money. And I have with me today a very special guest, a dear friend of mine, going back 12 years or even more at this point from Bond University days, both students of law and I would say digital assets fanatics. I have with me Razin Nizar. I'll let him give you a bit of an introduction about who he is.
Thank you so much, Sanat. It's really such a pleasure to work with you after, we studied together over 10 years ago. I'm excited to be here and thanks for the powerful intro again. So I'm a certified expert in compliance, risk, governance, and anti-money laundering. I'm also the founder of Primax Consulting, where I help businesses including fintech and other financial institutions achieve compliance excellence through smart planning and pragmatic solutions. So if you're interested to get to know me, please connect with me on my LinkedIn and visit my website to find out what I've been doing at www.primaxconsulting.com. So before this, I was actually a practitioner and I served as head of compliance for leading fintech companies in APAC, including the largest crypto exchange in Malaysia. So with my experience, I hope to give you guys, a lot of insights and, let's cut through the complexity of these emerging alternative financial services.
Fantastic. Thank you for being here. And this is going to be an ongoing collaboration. There's going to be a series of these recordings, articles published. So stay tuned. So let's get started with what we're going to be breaking down today for our audiences. We're going to be discussing money. Today is the topic on money. There's different types of money, and they seem to be growing as we age. Back in the days, we only had cash, which is known as fiat. Now we have e-money through mobile money. We have stablecoins. We have other digital assets, from NFTs to privacy tokens, you name it. And our aim is really to make sense out of these forms of money. How do they function differently from each other? And what are the regulations that governs these emerging technologies? And I couldn't have a better person with me today on this session to break these things down for us. So maybe we can get started with a very, very, very open question here, and a very basic one. Can you give us a breakdown of what fiat currencies are and why it's been a standard for so long?
Yeah, thanks. To define currency itself at this moment, it's so difficult because there's just so many means of payment instruments. There's just so many means of currencies. But if you're looking specifically on fiat currencies, what everyone that's used to, it's the paper money that's issued by and backed by the sovereign body or the government that issues it. For example, US dollars, and in my case, Malaysian ringgit, it's issued by our government. And it has evolved through, the use of e-money, for example. E-money is basically privately issued digital currency that is pegged to the currency where it operates in. I'll share an example. In Malaysia, we have Touch and Go, we have Grab Pay, we have Shopee Pay. Those companies issue e-money, and that e-money is the value is pegged on the currency of Malaysia, which is Malaysian ringgit. So there's a lot of evolution going on. And before I jump here, I just want to ask you, what are the things that you want me to zoom in? Because there's just so many things to talk about.
Yeah, you mentioned a lot of important things. So we know fiat, they're backed by governments, the US dollars, and a lot of currencies were at one point pegged to commodities. They stopped being pegged to commodities. Now they are, what makes the value of most currencies out there in the world today, if it's not pegged to an actual reserve of commodities?
From the point of view of digital assets, you mean?
No, from traditional currencies, and we want to see how that evolves into the other types of currency, because there's one aspect of this fiat and digital money, which we're going to go into it, or mobile money. But I think let's get into the fundamentals of fiat in this case. So they're not backed by gold anymore. The gold standards has been abolished by Nixon.
Yeah, they are completely packed. They're based on trust and authority of the sovereign body that issues it. So it's completely based on trust, which is why anything related to fiat is extremely regulated. It's highly regulated because the trust has to be maintained, and anything that impairs that trust can affect the entire economy. So that's the reason why it has been the standard for so long. governments control the supply of fiat, they set interest rates, they manage the economic stability. Their primary objective is essentially to enable, the reason for this is so that they can respond to economic crisis very quickly. So that's why, we entrust them to establish monetary policies, and we entrust them to put value on the currency. Yeah.
Fantastic. And so we know fiat as well has an underlying issue as well, which is protection against financial crimes from anti-money laundering, AML requirements in alignments with the FATF. So can you tell us as well about the current challenges? You worked in several roles, just tackling these problems. So what is the traditional challenges that current fiat currency has in that regard?
So this may be a bold and controversial opinion because I know it's a new concept for everyone. But in my professional opinion, fiat currency face a lot of challenge. In comparison to cryptocurrency, for example, even though fiat currencies, the record keeping, they are maintained by highly regulated financial institutions. They have rich, deep customer data. They don't have access to blockchain technology, for example. They only have access to centralized record keeping, which is the records that they have essentially. So if I compare this to blockchain, so I guess let me use Google Map as an example to exemplify blockchain, right? So if you use Google Map, let's say if you live in Kuala Lumpur and you want to go to a different state, you enter your destination and Google Map will calculate how you want to get to that destination. It will tell you, how long will it take for you to use car, public transportation, etc. That's how blockchain works. So blockchain, if you have the information and the skills, obviously some people you need to be certified to be an analyst. You can, with that information, you can find out where does the money go. So this is, in my personal opinion, the gap that is from transaction monitoring point of view, the gap that exists in fiat-based institutions where, blockchain allows for traceability of these transactions. But I also want to be fair. In blockchain, there are a lot of information that you cannot have. Like, for example, in the banking institutions, you have rich KYC information of each customers. Who are the person conducting the transactions, who are the depositors, as well as whether the payments go to who are the beneficial owners. But on blockchain, or cryptocurrency, there are a lot of cryptocurrencies that focus on privacy. So you wouldn't be able to tell, in a lot of instances, you wouldn't be able to tell who are the ultimate beneficial owner. But then again, everything is on the blockchain. It's publicly available. In fact, you can look at blockchainexplorer.com to look at any transaction that you want. Yeah.
Absolutely. I think one of the key things that you've hit on here is the traceability aspect, because with fiat, you can literally have ringgits or dollars or euros in your hand in cash, which what a lot of illicit organizations would use, and then they would money launder it because it goes off from one point. You don't know where it gets deposited at another point, and then how it shifts through. And tracking these, it takes a momentum effort, right? From cross organizations, cross countries, cross blob, et cetera, et cetera. So it becomes a bit of a nightmare to trace these. So then enters e-money, right? E-money now adds that traceability because you cannot take e-money as cash directly in your hand. You're actually transporting it from one mobile wallet to the other or through whatever means you have for transacting that. So can you tell me about the evolution of e-money and how did it help in that regards, and how's it been growing over the years?
Yeah, exactly. I think I just want to let our viewers know that we did have a little bit of conversation about e-money, and in Asia Pacific, for example, it's highly, highly popular. In fact, it's very common for a person in Asia Pacific to own 1, 2, 3 to even 5 e-wallets. The reason why e-money is very popular in Asia Pacific is due to it's cheap, it's accessible, and in Asia Pacific's e-money issuers, they usually integrate their products to a lot of other financial products. For example, digital marketplaces. Think about TikTok, think about Shopee, think about Lazada. So it's a lot more accessible for users to use e-money and then make direct purchases from these digital marketplaces. On top of that, in Asia Pacific, certain e-money have their own unique use cases. For example, in Malaysia, there's Touch and Go, where the e-money is commonly used for parking and tolls. So, and Settle, for example, Settle is an e-money issuer that primarily focuses on the payments of petroleum and gas for your car. So a lot of e-money has their own unique use cases. Shopee again, Shopee Pay, for example, is uniquely catered to purchase of digital marketplaces in Shopee. So yeah, so it's very, very popular. And I want to give you a comparison. In Malaysia, for example, e-money sector is actually the second largest financial sector. If I'm not mistaken, the amount of consumers or the amount of users of e-money is around approximately 80 million in comparison to the banking institution, which is 90 million. So, it's pretty much a norm in Asia Pacific.
Absolutely. And I see the growth of it as well in Africa. Africa was a continent that has struggled a lot. A lot of the populations have struggled to open traditional banking accounts for various of reasons, and especially for merchants that are selling stuff on the street. There's safety issues, safety concerns with the handling of physical cash. So e-money, mobile money became such a popular tool for transacting seamlessly, lower fees, etc. How about from a regulatory compliance? How does it has it enhanced the ability to track and trace transactions in comparison to traditional fiat?
Yeah. If you don't mind, just now you mentioned something about, how e-money has helped the undeserved population in Africa. I found that point very interesting because it's very similar to how it works here. Sorry that I'm jumping back to the point.
No, please, that's the form.
Yeah. So it's the same thing as in Asia Pacific. So the way e-money works is different than the banking institution because obviously e-money is in e-wallet, but e-wallets have their own wallet limits. So there are different tiers of product. E-wallets with lower balance limit as well as lower transaction limit, it allows customers to undergo simplified KYC or more simpler KYC. Therefore, increases accessibility. So, the higher the wallet limit, the more enhanced the KYC requirements are. So that, I think, one of the drivers of why it's so popular. It really helps the underserved population to gain access to financial services. Sorry, going back to your question on.
But that's fantastic to know as well. Because that makes sense. The more you earn, the more you're able to probably fulfill these requirements and so on. So it makes a lot of sense.
Yeah. So for e-money, I guess the removal of cash transactions help because obviously you can't trace anything from physical cash. So, but it's still, in my opinion, not as advanced as the blockchain because each e-money issuers maintain their own private ledger. And in order for anyone to improve traceability, there should be a shared arrangement between e-money issuers and the banking institutions, which I know exists within certain jurisdictions. So some jurisdictions have started to embrace data sharing between e-money issuers to combat fraud, for example, to increase traceability to combat fraud. But it does have limitations. It has some great features in terms of everything is recorded still, but it's still not as advanced as blockchain, where blockchain has greater accessibility. Everybody can view it at the same time without the need for having specific agreement or arrangement. Yeah,
absolutely. And just another question, just from an economic perspective, I just want to get an understanding of this. So when it comes to mobile money or e-money, whatever you want to call it, who are usually the owners of this digital figures that you're seeing on your screen? And are they required by law to hold a certain amount in reserve?
Yes, so different jurisdictions have different requirements. We call it fund management requirements. So different jurisdictions have different amount of money that you should have, or outstanding e-money liabilities in a trust account, and the percentages differ from one to another. If people are interested with e-money in Malaysia, BNM has issued e-money guidelines which have explicit requirements on how you should handle the funds, how you should handle the trust account where you can invest the money. But another important point to distinguish e-money and bank deposits is e-money typically are not protected by government-backed scheme insurance. Typically, if you place your money in a banking institution, your money is insured, whereas in e-money it's not. And maybe I can quote how Singapore defined e-money too. So Singapore must define e-money as something that is paid in advance when you make payments. So it's not considered as bank deposits. But there's still a lot of e-money issuers are still bound by stringent regulatory requirements on how they handle the trust account.
Okay.
Yeah.
And is there a certain percentage of cash reserve like we see, and we're going to get to that next with stable coins, but I just wanted to get a comparison between the two. Or is it are the private operators of these e-money platforms are allowed to have different types of assets as a backing, liquid assets like, let's say, security bonds or treasury bonds? How does it work?
I can only speak on top of my memory from the point of view of Malaysia. The percentage, I can't pick it out on top of my head. It's in the e-money guidelines issued by BNM. But in terms of the usage of the trust account, it is expected for e-money issuers to maintain at least 2 trust accounts. This is to ensure to safeguard the fund and to ensure that the not investors, the e-wallet users' monies are protected. Reserved to be protected. So that's in Malaysia, but it can differ to each country.
Okay, great to know. Which takes us now to stable coins, right? This is the hot topic right now. We saw huge developments over the last few weeks alone from the UAE, amending their proposal to make it more lenient to launch stable coins that are pegged to the UAE dirham, to Stripe acquiring large companies in this case that facilitates the use of stable coins. So tell us, first of all, what are stable coins? What is that world?
Yeah, so I think I just want to address some of the questions I always hear from my peers or the people that I know. A lot of people are stable coins the same as e-money? The answer is no, because yes, both are privately issued by private entities, but the way e-money works is it's a digital counterpart of fiat currency, whereas stablecoin is packed on real world assets. It can be fiat currencies, it can be commodities like gold. So that's the primary difference. But the reason why stablecoin is popular among the cryptocurrency world is because of the stability of its value, since it's always pegged to the certain currency that it's pegged to. For example, USDC. There's a lot of stability, and it helps to make them less susceptible to market volatility.
Let's talk about that. So what are the top known stable currencies that exist today, and how do they operate?
Yeah, some of the top ones, I think we all know USDT, USDC. I also just want to highlight SGD, which is a stable coin that is pegged to the Sing dollar. Malaysia hasn't recognized stablecoin as legal tender yet, so hopefully that will come soon. But yeah, those are the primary ones.
Okay, and why do you think they've gained so much popularity, and how does regulation come into play here?
Yeah, it brings me back to our discussion on e-money again. E-money is very instantaneous, very fast, very accessible, but the biggest gap with e-money is its lack of cross-border functionality. A lot of jurisdictions still, heavily regulate e-money from the point of view that you're not allowed to do cross-border transactions. There are only a few players out there that allow for multi-currency e-money, for example, Wise. But that's where stablecoin address the gap. Stablecoin is, known for it being the allowance of cross-border transaction. It's low cost. There's no intermediary, so it's really, really great for especially smaller businesses to cut down that cost of intermediary. And it's fast. It's it allows for cross-border businesses. And especially in Asia Pacific, where it's it's such a big region, but it's also a small region. Everything is globalized. Like we purchase a lot of our supplies from different countries like Indonesia and China, and stablecoin really help expedite that process.
Okay, so then let's put things into perspective. Fiat money, just to do a quick recap to where we are standing at this moment. So fiat are basically centralized. E-money is centralized. Stablecoin, decentralized. That's a huge differentiation. Backing fiat sovereign entities. E-money is by fiat currency. And stablecoins, now, this is a big question. How is it backed? Is it backed purely by fiat, like e-money, or is it a combination of both fiat and assets?
It really depends on the cryptocurrency itself. Like some like I said, like some stable coins, they are pegged to US dollars. Some stable coin is pegged to certain asset or commodities like gold or silver. So it really depends.
Okay, because what I saw is it's a huge momentum shift here. Because again, when we started this conversation, we talked about how fiat used to be back to commodities, and that standard has changed. And now I see a return back into using commodities and assets to back currencies, which is a huge change in the concept of money as we know it, at least since we've known it since the 1970s, since the change has took place. And I saw the recent, rules or proposal of regulations from the UAE that says this, they require in the UAE about 80% of the reserve to be held. Traditionally, it was cash. Now they're saying, no, you can actually make it more flexible to be a mixture of cash and assets that are highly liquid and stable, such as, treasury bonds from governments. It can also include AAA to A corporate bonds. It can include commodities that are a bit more stable. What do you think that will have an impact on the actual currency that is in the market? A lot of people are starting to favor things that are backed by assets versus backed by trust us, trust me, bro, it's good for it, right? Like that's the argument, right? So what do you think the impact is going to have on economies that employ or adopt these currencies?
Yeah, that's quite a complicated topic to dive into, because different jurisdictions have different risk appetite and they prioritize different things. That's like one of the concerns in Malaysia, where how is it going to impact the Malaysian ringgit, because the Malaysian ringgit is quite a restricted currency here. So yeah, that's the concerns. And countries like China, for example, they are again very protective of the Chinese renminbi, but there are if I were to say, we are still monitoring data in other countries that have pushed for stablecoin. For example, Singapore. Singapore, the pioneering force of stablecoin in APEC, just released the framework last year. So it's hard to comment on that, because we need to look at the data to see how that impacts Sing dollars for now. But we do know that the Singaporean government are taking a very cautious approach. They are embracing innovation. They allow for stablecoin, but only for stablecoins that are pegged to G10 currencies, for example. Yeah, G10 currencies.
Okay. And any other examples you can see from Asia right now? Japan is on the spectrum as well. Are they looking into cryptocurrency? Because I know they use similar platforms like WeChat, such as Line, which is quite popular, used by the majority of the population. How do you see it evolving there? And Hong Kong is another jurisdiction.
Yeah, Japan is also one of the pioneers in stablecoin. I mean, they already have implemented stablecoin framework. Just now you mentioned Hong Kong. It reminds me of Hong Kong actually recently published, if I'm not mistaken, an announcement that they will, to keep up with Singapore and also Japan, they will also start to regulate stablecoin. Can't remember on top of my head when, but yeah, I think in September they've already announced that. So yeah.
Another question that really brings itself here to light. When people hear cryptocurrency, I hate that word. You immediately feel that kryptonite effect, Sam Bankman-Fried, FTX, Luna crash that happened. How do you think these challenges can be addressed now? We talk a lot about decentralization being an aid against AML, SFT, and CPF, right? How is it an aid, and why are regulators concerned? If it's so transparent, why should they be concerned about such activities?
Oh, that's a very solid question, but we need to unpack it one by one. So I think it's very, very difficult to define cryptocurrency. So there are over 20,000 cryptocurrencies in the world, and I would say almost each of them have their unique use cases. And it's at this juncture, a lot of regulators, a lot of people approach it based on our existing understanding of how the financial system works, which is very different than the world of cryptocurrency. So at this point, a lot of regulators try to either fit them into a payment instrument or securities. But it's hard because, for example, I'll share an example of Bitcoin. Bitcoin is recognized as a securities in Malaysia, but it's not a payment instrument. We know that a lot of people, make payments through Bitcoin. So it's hard to categorize it. So I guess the biggest challenge is how to apply our existing knowledge and define cryptocurrency. Should it be a category of its own, or can we fit them into existing categories? My personal opinion is we cannot fit them into existing categories just because of how unique each of them are. I think cryptocurrency deserves its own category of definition and concept and regulated in a much more unique way in comparison to fiat. But yeah.
We talk about it being, decentralization as a good thing for traceability. But yet again, there's a lot of money laundering happening in the crypto world. A lot of buckles that have happened in the crypto world. Fraud as well. Like FTX is the biggest example of fraud. They were showing users that they had a certain deposits in their account, while in reality they didn't. So how is that so apparent transparency, yet can be exploited by illicit players like FTX?
Yeah, great example of fraud, because fraud usually requires immediate attention to prevent, detect, and secure investors or users' funds. The problem with cryptocurrency is that it's irreversible. So once a fraud has been committed, you cannot reverse the transaction on the blockchain. It stays there. So the question is, who bears the onus of protecting the customer's funds? If I'll share a common fraud trend or fraud typologies in Malaysia. In Malaysia, there's a lot of organized fraud syndicates where they always lure victims to share their financial credentials, to share their OTP, to share their passwords. And in most cases, they lure victims to like, hey, you want to invest in ABCDE, you need to give me your credentials. And, typically users would, give up those credentials in the hopes of obtaining certain, revenue or certain profit. But once they give you up their credentials and the funds are, the funds are deposited into an exchange, and then the exchange purchase cryptocurrency, and then it's transferred to another wallet, it's not reversible. So the challenge is how to give the money back to the customers. But
so once the damage is done, that's the problem. You can hold people accountable like they did with Sam Bankman-Fried and his crew. They all got prosecuted, and they're trying to recover through catching the people that did it. And I think this is a really important part, that a lot of the fraud cases that have happened in the blockchain space, the perpetrators were caught eventually. Very few cases where they were not. It's just a matter of time before they are. Because as you said, everything is public. Any transactions conducted can be monitored in real time, which is a unique advantage for regulators. This is a really important part. that we need to mention. So let's talk a little bit about that aspect. So it comes to the traceability, and there's two sides of this coin here when it comes to no pun intended with mentioning coin, but there's one aspect of traceability and transparency. There's another aspect of being anonymous and being able to open ghost wallets, right? So why do you think stable coins are going to be the future of e-money and in terms of regulations and supporting these illicit activities? What advantages does it have?
Stablecoin, again, the biggest advantage is its ability to make cross-border payments instantaneously. It saves so much time as well as resources to purchase supplies and receive the goods. You mentioned just now about the anonymity of wallet holding. So that is a very huge risk that has been recognized and accepted. That's the issue right now because, especially from money laundering perspective, because the goal of money laundering is to disguise the beneficial ownership and to lay you the money, right? So that's the biggest issue, and because of that, the FATF has mandated travel rule to address that risk. For those out there who don't know what travel rule is, it's essentially, it works very similarly to how remittance regulation works, where it requires it requires exchanges, it requires virtual asset service providers to obtain originator and also the recipient information. So this, to tackle the risk of anonymity. But the issue is it's not yet uniform across the world. Some countries, for example, Australia, will only implement it in 2025, the expected. Malaysia has already implemented it, and Malaysia implemented on each inbound and outbound transactions. But countries like Singapore implemented based on threshold. If I'm not mistaken, it's around 1.5 Sing dollars transactions. You need to implement travel rule. So the challenge is the lack of uniformity of travel rule implementation. But if you want to talk about the future, I think travel rule is a good start to address those gaps. And from the travel rule implementation, gradually, I think those risks will be reduced. Yeah.
Okay, that's amazing. And again, like anything else, when a technology is disrupting a market, regulators tend to be slow to react, but that's part of the process because there's a lot of learnings to be made. And then we have these regulatory sandboxes. So what is the advantages of implementing a regulatory sandbox for, let's say, countries that haven't adopted yet one? And how could that really help them leverage these new innovations?
Yeah, I think regulatory sandboxes are a very smart way to test whether an innovation can work or not. So it allows regulators as well as businesses to get information on whether or not there's a demand from business perspective. And then when you introduce it, what are the inherent risks associated with it, and whether or not the regulators and existing businesses have enough controls to mitigate those risks. So regulatory sandboxes work where, typically in certain jurisdictions, they have a minimum criteria of, which company that can participate in regulatory sandboxes. It works very similarly to license application, but I guess in a less stringent way, because a lot of these new companies, they may not have the same maturity level as existing financial institutions, and typically regulators allow for the product to be tested, but in a much smaller scale, to get the data, for example, transaction, to get the reporting necessary to find out what are the risks and whether or not existing controls are capable to handle those risks. So that's regulatory sandbox. Recently in Malaysia, I actually attended a conference in October 2024. The SC just announced that they are launching regulatory sandbox for securities tokenization, and Malaysia has already launched set regulatory sandbox for financial instruments, for payment instrument. But yeah, and you mentioned just now UAE also just started regulatory sandbox, right?
Yeah, I
You
mean,
know.
they've had one
Mm,
already. They do have a very well
mm,
established one. However, they've just updated their proposal on stablecoins specifically
yeah,
to create more leniency and an easier path to have the
yeah,
cash reserve needed to launch the
yeah,
token. But yeah,
yeah,
they're constantly pushing for these innovations, which really makes them stand out in the Middle East region as
yeah,
really the pioneers and the hub for blockchain innovation as a whole. Um,
yeah.
so, so I think now we can talk about something very specific. Now we've covered stable coins enough, e-money, fiat. Let's talk about other digital assets.
Mm,
The most famous two, they call them the gold of cryptocurrency, Bitcoin, and the silver, Ethereum.
yeah.
How are they fundamentally different from stable coins? And yeah, how are they regulated? Or how are they viewed from a regulatory perspective?
Yeah, so these are the let's just call it non-stablecoin digital asset, like Bitcoin and Ethereum. They are in Malaysia. They're considered as securities, because they're not pegged against a real commodity. They are pegged against, in a simple term, market and supply. So that's why they fall under the umbrella term of securities. Therefore, because they fall, I'm only speaking from Malaysian point of view, because they fall under the securities, they are under the purview of the Securities Commission of Malaysia, and the same requirements that apply to capital market intermediaries apply to any exchanges or any digital asset business operators that transact in these securities. Just want to clear the air. Like, a lot of people still have doubts on the compliance level of securities. Again, when it comes to AML CFT, they are bound by the same guidelines as other capital market intermediaries, which has existed for decades. So, in Malaysia, it is highly, highly regulated. There's a lot of requirements that needs to be, complied to. In fact, another unique regulatory requirement in Malaysia is that before the listing of any non-stablecoin digital asset, exchanges have to go through rigorous risk assessment, and the Securities Commission have to approve those digital assets. So yeah, that's an overview of how it works here.
Yeah, absolutely. I mean, I think one thing that we can add on this, the reason why Bitcoin is often compared as digital gold, it kind of follows a really interesting. For me, it's hard to consider it as a security because Bitcoin has one main utility: it's currency, right? That's
Yeah,
from my perspective as a consumer. While Ethereum falls under another category because Ethereum has utility. You can use Ether to pay for gas, which is the processing fees for building decentralized applications, for launching non-fungible tokens, for doing a host of things.
yeah,
So the more users are in Ethereum, obviously, the more consumptions of ETH. And there's, of course, the people that use it as an investment into the company. So they believe in the long-term vision, so they use it as a security. Do you see this dichotomy between these two currencies, that they don't
yeah,
necessarily fall under the same category as a security?
yeah. Yeah, I mean, I agree with you, which is why, like, in my personal opinion, it deserves its own category. Because in Singapore, for example, they define it as digital payment token, which
Yeah.
is a payment instrument, which is different than in Malaysia. So I think it deserves its own category because it works. I can't compare it with fiat. I can't compare it with fiat. It's completely different. Yeah.
Which makes it stand the test of time, right? That's why, like, it's the
Yes.
first, the original. It's so unique.
Yeah.
Just the momentum of growth that people are adopting it, and nobody knows who's Satoshi Nakamoto yet, or are they going to
Yeah.
announce it soon?
I mean, based on what I heard, they're gonna announce it on 31st of October 2024, which is today US time.
Okay, yeah,
Yeah.
it's 1st of November
Yeah.
here. So,
Yes.
uh, who's releasing it, by the way?
I'm not sure. I just read it on the news like right before this podcast.
Okay.
So I'm excited to find out as well.
Yeah, I
Yeah.
don't know. This is the question that everyone keeps asking. Who is Satoshi?
Yeah.
I was fortunate enough to meet someone who was referenced in the original Bitcoin paper. He's one of the very few people, a professor
Wow.
from Stanford University, focused on, of course, cryptography is one of his areas of focus. And his paper on cryptography was referenced a few times. I asked him if he was Satoshi Nakamoto, and he responded by saying, no. I am not Satoshi, but I can tell you, and I don't know who Satoshi is, but I can tell you one thing: Satoshi knows who I am. And I'm like, that's the most boss
Uh,
answer I could ever hear.
wow.
But
I mean,
yeah,
yeah. I
yeah,
mean, technically, he's the reason why we're here. Technically,
that,
he's the
that's
reason
the
why we have
flex.
this podcast.
Exactly.
Yeah.
That's quite of a flex.
Yeah.
Good. So let's then finally go to the wrap up of this wonderful time. I wish we can speak longer, but I know your time is valuable and it's a Friday. So let's cover a few things here. Um, you know, let's talk about the future of digital finance and regulatory evolution, given all these types of currencies that we've discussed, the different types of financial instruments. Where do you see the future of these assets in terms of regulation? Will we see more alignment globally? Is that where we're
Yeah.
heading? Because Europe has MiCA, which is doing it across all of European states. Do you think a larger, framework could be adopted globally?
Well, okay, I'm going to start with consumer point of view first. From consumer point of view, I don't think it's the future. I think it's already now. It's perhaps it's even a thing in the past. But in terms of regulatory framework, I think we have no option but to regulate. We have no option but to regulate the innovation to mitigate the risk. So for countries that haven't regulate, time is ticking because again, it's not a future product; it's a current product. Where do I see it in the future? It will be perhaps regulated by the same standards as what's expected from a banking institution. But I do see a lot of private-public partnership. I do see through regulatory sandboxes, for example. I do see a lot of those partnerships where each parties have embraced learning from each other and providing information. And this exchange of information help the regulators to provide framework that is both business friendly, but protect the investors and also protect the public. So I think there's no escape except for establishing a business friendly regulatory framework. And now we are already seeing it being regulated. And Indonesia, for example, but OJK just take the responsibility to regulate crypto in Indonesia starting January 2025. So yeah, I think it's not the future, it's the present.
It's the present. It's
Yeah.
here. And
Yeah. It's here.
as we saw in your example, like the use of fiat versus e-money in Asia, in Africa, and a lot of parts of the world is increasing rapidly. Even in the Middle East, we have STC Pay, we have Benefit here in Bahrain. We have all these types of e-monies already here. It's already there, and stablecoins now provides even a smoother onboarding than traditional e-money, and so we can see that evolution as well and how it's going to grow fast. It's really unique times that we're living in. The world is changing.
Absolutely.
Regulations are changing. Money is changing, and the value of money and how do we perceive it is changing as well. So thank you so much for joining us and sharing with us your expertise and personal reflections on the industry. Thanks for being here.
Yeah, thanks. Thank you so much for having me. It's been a pleasure.
Great. And guys, where to follow Razin and myself. We have the QR codes. You can connect us with on LinkedIn. You can go to pragmax.com if you want to book a consultation. And of course, you can also go to Moonrock Consultancy, and it's under moonrock.se. Started in Sweden, but expanded globally. So we're still here. We're still doing it. Thank you, Razin. Really a pleasure.
Yeah. Thank you, Sanad. Pleasure.